Jeff Bezos once went an entire year without paying a single cent in federal income tax. During that same year, his net worth increased by billions. You probably think he's breaking the law. You think he's hiding money in a suitcase in the Cayman Islands or has a secret team of hackers deleting his files at the IRS. But the truth is much more frustrating. He's following the rules perfectly. You're just playing a game where you don't know what the rules actually are. Most people think the way to get rich is to get a high-paying job. You study hard, you get the degree, you land the six-figure salary. But the moment that paycheck hits your account, the government is standing there taking 30 or 40% right off the top. You are trading your life for a currency that is taxed at the highest possible rate. Therefore, the harder you work, the more the system takes. But the 1% doesn't work for a paycheck. They work for assets. Imagine a guy named Mark. Mark starts a tech company in his garage. For 10 years, he pays himself a salary of exactly $1. On paper, Mark is a pauper. He qualifies for food stamps. He's technically broke. But while his salary is $1, the value of his company has soared to $10 billion. This is the first Lego block of the strategy, the buy phase. You see, the IRS doesn't tax you on what you're worth. They only tax you when you realize a gain. If Mark's stock goes from $1 to $10 billion, he hasn't actually made any money in the eyes of the law until he sells that stock. But if he sells the stock to buy a mansion, he triggers a massive tax bill. Therefore, he can't sell. But he still needs the mansion. So how does he get the cash without selling the shares? This is where the story gets wild. Enter the second Lego block, the borrow phase. Mark goes to a private bank. He tells them he has $10 billion in stock. The bank knows that stock is gold. So instead of telling Mark to sell his shares, the bank offers him a deal. They give him a massive line of credit, let's say $500 million, using his stock as collateral. Now, Mark has $500 million in cold, hard cash sitting in his bank account. He uses it to buy the yacht, the private jet, and the penthouse in New York. But here's the kicker. In the eyes of the IRS, that $500 million isn't income. It's a loan, and you don't pay taxes on loans. In fact, the interest Mark pays on that loan is often tax-deductible if he uses the money for business investments. Therefore, Mark is living a multimillionaire lifestyle with zero taxable income. He is technically in debt, and on paper, the IRS thinks he's a struggling borrower. But the stock he used as collateral is growing at 10% a year, while his loan interest is only 3%. He's getting richer by being in debt. But eventually, everyone has to pay the bill, right? Eventually, Mark is going to die and the bank will want their money back. This is where the final, most controversial Lego block comes in, the die phase. When Mark passes away, he leaves his $10 billion in stock to his heirs. Under current U.S. tax law, something called a step-up in basis occurs. This means that for his children, the cost of that stock is reset from the original $1 to the current market value of $10 billion. If the kids sell the stock the next day to pay off Mark's loans, they pay zero capital gains tax because, technically, the stock hasn't gained any value since they inherited it. The billions of dollars in growth simply vanish from the taxman's ledger. The loans are paid off, the remaining billions are kept by the family, and the IRS gets nothing. The cycle is called buy, borrow, die. It is the engine of dynastic wealth. It's why the rich get richer while the middle class feels like they're running on a treadmill. The system wasn't designed to be fair. It was designed to encourage the ownership of assets over the earning of wages. You are taxed on what you do, but they are protected by what they own. Once you understand that debt is a tool for the rich and a trap for the poor, you stop looking for a better paycheck and start looking for a better asset. The system isn't broken. It's working exactly how it was built. Now that you know the rules, it's time to change how you play.